Good morning, everybody. Welcome to the Flow Show. Yesterday, I'm a very happy hammer today. It was a great result. Can't wait to speak to Mr. Michael Brown later when I record the trade-off, seeing as he's an unhappy gooner. I'm looking forward to that chat later on, I can tell you. I've refrained from slaughtering him on Twitter, but yeah, I'm going to have fun with that later on. Hope you're doing bright and well this morning. Morning, Kay. How's things?
Morning, Ryan. Yeah, all good, mate. Welcome back. Well, at least for a little while. Good morning, everybody. And hope everybody had a very nice weekend.
Yep, just popping back, it seems. Going to be off, well, we're doing a Flow Show tomorrow, then I'll be off Wednesday. I'm going to be running up and down to London for a gig, a Pantera gig, so it's going to be a messy one, no doubt. Right, anyway, let's get stuck into it. Right, we'll start with the German election, and the CDU party won, with the AfD coming second, not polling as well as expected. The AfD, this supposed far-right party, apparently was going to do extremely well. Well, they ended up coming second, so that was a bit of a result in itself, but they couldn't beat the CDU, and it looks like we're heading towards a coalition between the CDU and SDP, with Friedrich Merz becoming the new chancellor. Okay, that's pretty much we're back to the Merkel times, really, where it was SPD and CDU and CSU and that whatnot. So just with the CDU in charge this time.
Yeah. Yeah, the polls were pretty much on the money, with the SPD losing quite a bit. Yeah, the coalition, but they may need the help from somebody else, because if you take all the right-wing parties together, there is a blocking minority potentially. So there's going to be a bit of negotiation to be done between several parties, and that is something that may still leave us with something to wait for, and a potential risk in Germany if they don't find agreement, because there is this debt brake thing, and the need for subsidizing fresh spending and stuff, and the problem is between the parties in Germany. They don't really align on how to fund all of that. And so there was a positive for the euro, as the indeed the AfD hasn't gotten as many votes as people would have feared in markets, but on the other hand, they are not completely out of the woods yet there.
Yeah, lots of negotiations and horse trading to go on, and but I think that if the CDU and CSU get a coalition together, the market will be happy that there's at least a bit of solidarity going on, and it removes the uncertainty, and life can go on, and then the market will just trade on whatever fiscal stuff they then come up with after that. But stability is what the market wants first and foremost.
Yeah, I think if you want to really measure how the market reacts to it, we don't only have to look at the euro. We have to look at stuff like the DAX and etc. as well. You look at the DAX, and that's probably where the market is going to tell you whether it's happy or not with stuff.
The DAX doesn't go down, does it?
It can't for the moment, that's for sure.
Bad news, it still goes up. But,
no. The outlook for lower interest rates, perhaps. I mean, there's such a big mix of stuff going on right now.
Yeah, exactly. Right, well, the first data the new government, say new government, it's not there yet, but had to play with was the IFO numbers for February. These probably going to be more important the next round of numbers, the ZOO and the IFO, just to see the reaction to the election, as opposed to pessimism or optimism, lack of, running into the election. So anyway, there was a slight improvement in the business expectations. Current conditions, though, pulled back slightly. The climate overall came in unchanged over last month, although that was uply revised. But as I say, these numbers are probably going to be more important in the next month to gauge the election. Final numbers from Eurozone CPI there, nothing to write home about. CPI confirmed 2.5%, core 2.7%. We do get the February numbers, flash numbers coming through towards the end of this week from Europe. So these January numbers largely redundant. ECB's Vilroy said ECB's deposit rates could reach 2% by the summer. ECB's Lunch says they face the risk of sleepwalking into too many rate cuts. But then he says he's comfortable with a market expectation of 2% rates by year end, give or take 50 basis points. So giving himself a nice wide margin there. Says ECB may need to lower rates to stimulate growth. One thing I have been picking up on, and we noted it in the last couple of weeks from the likes of Holtzman, is that it seems the hawks and some ECB members are just starting to think about applying the brake pedal to rate cuts. So we've not got the next meeting until March, but could be more of a closer run thing over whether they continue cutting or not. Your mate, he's your governor over there, Kay. He likes to give himself a little bit of a wide quote, only the 50 basis points on his 2% target there.
Yeah, he must have been part of the team that put the neutral rate expectations together. Give and take 50 basis points either way. That's a bit of wide one. Yeah, he's usually seen as relatively hawkish, but then if you look at those comments, there's a bit of everything in there. So I'm not going to read too much in those. But you're right in saying that after a series of rate cuts, there may be bigger discussions upcoming for the next round of cuts. And yeah, as I've been saying, I think those are going to be decided by growth. Where inflation is perhaps stalling, but not really ramping higher anymore. Obviously, no victories should be called on it, regardless what's it's Panetta and Villarroel may say, but. Yeah, I think the next round of discussions surrounding rate cuts maybe. We need to look at growth, I think, in the Eurozone. If that doesn't pick up, then they likely will continue to cut. But if it starts to show green shoots, we might see a bit of a pause coming as well.
Yeah, exactly. And that's the core CPI chart there, which does show it's pretty much flatlining and has been for quite some time, and that the core is important to them. Not climbing higher, but it's not going down either. And as I said, towards the end of this week, we get some flash numbers from France, Germany, and elsewhere as well. So if those come in higher, I think we probably see a bit of a reaction in those rate expectation trades. How long that will last, I don't know, given all the other stuff going on in the world, but it could be worth keeping a close eye on for at least a quick reactionary move to that. Right, coming back to some of the data from last week, not an awful lot. We've got Canada retail sales out, which showed a nice healthy end to the year. Retail sales from December coming in 2.5%, and core sales, stripping out autos, at 2.7%. So looks like they had a bit of a Christmas spend up in Canada. We got the PMI from the US as well, and a bit of a wonky one. Services surprisingly moving into contraction. Manufacturing, though, had a little bit of an improvement, 51.6. I didn't read the report. Kay, was anything special in that?
No, just those services. They came a bit of a surprise move lower, especially. Well, There is a bit of a give back, I think, as well, because you have price hikes in January and stuff, and then in February there may be a bit of a give back there. Um, but yeah, then it's mainly the new orders and business expectations. They were like a bit very sluggish. And also as we've been talking about those front running of what may come, and we can see perhaps a slowdown there in the activity numbers come post January, right now that Trump is in the seat. So yeah, hard to read a one-off number, but we have to note that it is a February data, and it is after Trump's inauguration. So perhaps the market is not looking that positive, or the positivity ahead of the inauguration is perhaps waning a bit. Yeah.
Yeah, I was thinking this one might have been an important one last week because it is the first one after the inauguration, so maybe a little bit of an indication that an indication from firms what they feel about his policies. Not surprised to see manufacturing maybe ticking up on that perspective, back to make America great again and bringing business home and manufacturing home and whatnot. But yeah, that one, it was going to be interesting ISM when we get it in a week or so's time to see how that one plays out as well. We also got the final Michigan numbers as well. Now there's a lot of talk about this data at the moment. Okay, first and foremost, it is a pretty small survey, 500 people surveyed by phone. And a lot of people now are picking out the differences or picking out the political aspect of it, i.e. the votes or people who are polled who are Democrats, people who are polled who are Republicans, and they're pointing out the big differences between things like inflation expectations, where Republicans see something like 5% inflation, but Democrats see something like 1% inflation expectations. So on one hand, you could say, yeah, it's a bit of a non-survey if you're taking it from the political aspect. But as I always say, the data is the data. Okay, what gets printed is what gets printed. It doesn't matter if this number is high because of Republicans thinking inflation's higher than Democrats. What matters is that the numbers are higher overall. And if you look at elections, far more people voted for Republicans than they voted for Democrats. Pretty much that's how all elections work. So if more people think that inflation is going up, it can affect spending patterns. So yes, the demographics might be important politically. For trading, the numbers matter. Okay, whether it's higher or lower is still a balance. It's still an index, okay, between the two parties. And at the moment, it's not looking all that great, and we've got higher inflation expectations. The Fed might be brushing that under the carpet in favour of market rates, but if it continues like this, they may not be able to ignore it for much longer. Those 5-year inflation numbers ticking up 3 pips as well, even though the 1 year remained unchanged. All the other numbers coming in red though, and worse pretty much than the flash numbers as well. We don't often see such a big variation between the flash and the finals. We also got existing home sales, which was a little bit softer, 4.08 million, down from the 4.29 prior. House prices, though, holding up. They were up 4.8% from last year, but they were down slightly on last month's numbers, though. So still not seeing anything too terrible in the US data, Kay.
No, not from that side. Permits and stuff, housing starts, they gave back some, but after a bumper report from the prior month, so I'm not looking not looking too deep in that one yet as an alarm raiser. The Michigan is same as every time. It's is the communicating vases. If your inflation expectation is higher, the consumer sentiment is lower, and vice versa. So that's a bit of a logic one. Um, yeah, that sample is. I know, and I'm the first one to say that yeah, the number is there, so that's what the market reacts to. But it is a very small sample, and it's a random one as well. Every month they are calling up 500 different people. So I don't know whether it's really that important now, but it is important in the light of all the events and the new president now in the seat. So it has its importance. Yeah.
Yeah, very much so. Galaxy is just asking, assuming the EU will be investing more in defence going forward, do we see that as net investment growth or more of a diversion from other industries? Potentially increased debt some, but overall GDP net increases probably. Yeah, it will be a diversionary growth thing. Yeah, you probably don't want to be short defence stocks anytime soon, but they will be increasing debt to pay for this, increasing defence spending, irrespective of what happens with the Ukraine war. If there's peace, probably still have to get defence spending higher because they don't want a repeat of that to happen again. So yeah, it will be a bit of a moving the goalposts a bit, or moving from one pot to another. So you may see growth falling in other industries, but in defence side of things, it will be picking up. But yeah, debt. I see no paths that doesn't see debt going higher on the defence side of things. I don't know if you've got a different view on that, Kay.
No. I think, yeah, I mean, it may actually affect growth positively in a way, but the market will make the difference between what is defense and what is not, you know.
Yeah, exactly, and it'd be a short-term boost in growth probably. Anyway, right over to Mr. Stiff, the BOC. Mr. Macklem says Trump's tariffs are seen cutting Canada's exports by 8.5% in the first year. It would slash Canada's output and then slow growth. So, cheerful comment there. He also added that we cannot let tariff problems become an inflation problem. Mr. Putin was out last week, over the weekend, saying Russia producers must get preferential term if foreign firms return to the Russian market. That was via the TASS news agency. So talking about what might happen if the war ends. It also said Russia should produce lithium and it has all the capabilities to do so. There was a sources piece saying that Russia could concede 300 billion in frozen assets as part of the Ukraine war settlement. That's part of everything that's been going on. There's been a lot of asset freezing going on, and I don't know if Europe started spending some of that. Kay, they were threatening to start spending some of those frozen assets. They're
Yeah,
going to
and I
get
think
a bit of egg in their face if they have to give some of them back.
no, but I mean no, but I think the funny thing about that Russian thing is that those assets are in theory don't belong to them anymore. So they say like, oh, okay, I mean we can use them, but they don't have the hand on them anymore. And same thing, they added that it would be to help the reconstruction of parts of Ukraine that Russia is now controlling. So I mean they you want to. You don't have the cake, but you still want to eat it, and you tell the other ones, yeah, use it, but for reconstructing my stuff. So I mean, it's a complete well, I mean, it's a ridiculous proposal for me, but okay, I don't know. I mean, that was just I had a good laugh about that.
Yeah,
It's as if you give I I I take your money and then you tell me, oh, okay, finally use it, but use it to help me.
yeah, exactly, and keep it. Yeah, bonkers. But that's what we're going to be dealing with. The Kremlin were out again this morning, saying that Putin was saying that without understanding the root causes, it's impossible to properly resolve the conflict. And said, we see the US is trying to figure out the root cause, and we hope this will help towards a settlement. So there's going to be further talks with the US this week, which will focus on eliminating irritants in ties and on the work of foreign missions. So the talks are continuing. Trump obviously not been quiet over the last few days. He said he started off slagging Zelensky again, saying it's not important for Zelensky to be at peace meetings. But then he said that they are negotiating with Russia and Ukraine, but that Ukraine has no cards to play with. Says Putin and Zelensky need to work together, and he sees a chance of a Russia-Ukraine peace deal. Says we will need to sign a security deal or there will be problems. What is happening this week is further talks on this rare earths, rare materials deal between the US and Ukraine. That seems to now be the starting point for any further easing or attempts to sort out the war generally. If the US gets its way, then it's the green light to then properly organise something with Russia. US has also been speaking to China. They're back on having these, I think they're monthly conversations on economics and whatnot. China's VP said two sides had an in-depth exchange of views on important issues in China-US economic relations. China's Xi, though, just making it clear that for all his intent on helping solve the crisis in Ukraine, he says history and reality show that China and Russia are good neighbours that cannot be moved away. They are true friends who share weal and woe and support each other to achieve common developments. That was out on Chinese state media. So it's a little prod that while China likes to play the middleman, they also got Russia's back. And lastly, a bit of news that was out, I think it was over the weekend or late last week. A new coronavirus with the potential to cause another pandemic has been discovered in China, in Wuhan, of all places. That was posted by the UK Daily Mail, which I wouldn't call it the most reliable source on that one, but we'll just keep an eye on that one if it develops into something. Kay, any other headlines?
No, I don't think so. I mean, not overly important ones anyway.
Cool. Thank you very much. Right. Well, then we'll move on. We'll have a quick look at what's coming up this week on the data front. Not a lot out today, just some minor regional manufacturing surveys and whatnot. Tomorrow, not a huge day. We get some house price data. We do have US consumer confidence, which is the conference board number. So that's a bit bigger than the Michigan confidence numbers. So that will be probably the highlight of tomorrow's data. Again, we'll keep an eye on those inflation expectations and whether the market makes a political case out of that as well. Wednesday, further housing data, new home sales, but not a lot else out. Thursday, we get some GDP data out of the US, durable goods as well, further housing data as well. Tokyo CPI is on Thursday as well. I believe it's not showing on this calendar, but I think it's up on Thursday. So that's going to be important because it's the first new numbers for February ahead of the CPI data, which usually comes a week or two in the future. So that'll be in Asia time for that one. Then, as mentioned on Friday, we do get some Eurozone CPI numbers, France and Germany, and we get the German regional numbers as well. So these are the first numbers for February. So they may have a bit of an impact, as I said, on those ECB rate expectations. Maybe get the market, if they're hot, thinking about a slowdown. May not stop a cut coming in March, but it won't stop the market trading as well. Then in the US, we get the PCE data, which is going to be, I think, a pretty decent number to trade because we've had the CPI data, which was all much hotter, but the market was looking in the PPI data for the components that feed into PCE, and some of those were softer. So this might, for once, go the opposite way of what we see in the CPI data, which was all sticky and mostly higher. Anything in that lot, Kay, you're keeping an eye on?
Well, the Japanese data will have their importance now. What I find quite interesting going forward is we are and I forgive me for not recalling the date, but we are getting a bit closer. Maybe it's still weeks to go, but to the UK budget, and it's very quiet on the UK front this week. So our attention, or the attention of the market, may wander away a little bit of the sterling. We do have a couple of Bank of England speakers, but it's going to be very quiet in UK land. So usually when there's not a lot going on in the UK land, we could have quite a move in the sterling. That's what I've noted historically. When it's gone really quiet, sterling tends to be a bit of a mover. It seems that the players are saying that nothing can derail what we want to do. So now we can trade a bit. It's just something that I noted historically, that it's not while there are no numbers that in sterling that sterling doesn't move. So just wanted to give that for our community.
Yeah, good point. Good point. Yeah, the pound will become a bit listless perhaps until we get some news from many of the. Yeah, but I think we've got Dingra, who's the arch dove.
Ultra dove.
Yeah.
Rate should be at 0.
Yeah, or negative. Yeah, so it's probably no surprise what we're going to get from her. Not sure it's going to move the market, but we shall wait and see. Okay, right, let's move on to what's been going on. Euro, let's start there. We had this boost from the election. It wasn't as bad as feared. And we got to move up into 105s, and it ran into the traffic zone right at the top, 105.30s. So yet again, we've hit that area, and we can't hold it. We can't hold a move above 105, and we can't get through 105.30. Tells you everything you need to know. Now, on the other side, we've come down and found support again down into the top of this zone here. We're still in an uptrend from this 102s. Okay, so there is still a chance that we are going to break higher. But I don't see, unless it's a headline, a big headline that shunts it up 50, 60, 70 pips. I think if we are going to be moving up here, it's going to be a slow old grind, because we get a lot of tech above 105.30. We've got these fibs to deal with from the 112 and from the November phase here. And then we've got that 106 level to deal with as well. Kay, can we break above here, or are we still keeping this bearish trend going with perhaps a move back down towards the lows?
I think we're a bit stuck for the time being. We're a bit stuck because you have Euro events which fail to get it to break fresh ground. But there is still so much going on geopolitics that it's a bit of an open question. I'm just noting that 104.30.50 seems to hold right now, and your 105.30 as well. So that's really the range we are playing now in the euro dollar. I'm not convinced about a side in the euro right now, I must say. I've got. Well, I mean, it's not a big bias, a huge bias, because my positions don't reflect the lack of real confidence that I have in big moves. I do have a slight negative bias on the dollar. So I would say that there is a fair potential that euro holds that support. But on the other side, it's still the euro, and I'm still not convinced the euro can stand up. There's still so much uncertainty, growth in the eurozone. We've seen also the French numbers come down quite a bit last reading on Friday or Thursday, the French PMIs were a bit shite. Yeah, therefore, I'm not sure that the euro is the best vehicle to express a side on the dollar right now. We could be hanging around here until we know a lot more about what they have to pay for Ukraine, whether they can get an agreement in Germany on the budget and on the increased spending, on the debt break. How are the data going to look now that France is markedly slowing down as well? It's there's a lot of uncertainty. Obviously, if the Ukraine situation all of a sudden sees a positive, that by positive I mean that Ukraine and Europe are around the table, then we could break. But then the next question is going to be, are we going to change the overall trend? That is, break through 106 figure 15, which is still going to be the major level. So that's about where I am for the euro. Euro is not my preferred one to express many things right now.
Yeah, I'm in the same boat. You don't want to buy the euro for what's going on in the euro, yet you don't want to sell it because the dollar's not looking all that great at the moment. It's like you look around what you want to buy, and you can't. There's not really anything you really want to buy, or anything you really want to sell at the moment.
Yeah.
It's just one of these, because you're trading the fundamentals. You've got the political risk. You trade the political risk. You got the fundamentals, and everything else in between. I still think we get a good risk rally if we do get a settlement headline for the Ukraine Russia. But I think then we move quickly afterwards over, right, how much is that settlement going to cost Europe, let alone Ukraine? And then that's going to be the next move we get in the euro. So yeah, it's a difficult one. But I'm
actually,
yeah, go on.
It's actually globally relatively hard to know what to buy and to sell. I mean, yes, you have the yen. The yen is perhaps the outstanding currency that has strengthened quite a bit. A lot of tailwinds there, but the rest is still pretty hard to know. Where we are now, I need to add, because I mean, people in the room know that I've been short dollars, I've been long cable, long Aussie. That was working pretty okay. I ran the gold for a good while. So my bias is still for doing relatively the same things. Like I think the dollar is going to give back more of its gains that it had over the past months, years. But right here and now, if you don't have a position, it's relatively hard to know what exactly to buy or to sell.
Yeah, no, I can conclude with that. I mean, I think that if the techs are playing nicely in any pair, then you don't really need a bias. I mean, 64 was on everyone's site, and we had the fib up there, the 38.2. We got into 64s, couldn't hold it, and down it comes again. So, that was my next sticky area up here. And I said it was going to be sticky through this zone. So, yeah, you can play the techs. I've been playing Aussie from the short side on Aussie Kiwi. The techs are playing nicely. Yeah, we had a bit of a noise going up here. We're still in a bit of an uptrend from down here. But when you hit the bigger levels, the ones you really want to see holding, those are the ones that are holding. And then you play with whatever's going on in the rest of them. Even cable, as you say, here we go. Get up into this zone here, up towards 127, big old zone, big old area, and it holds. And you could have done that against these big levels all the way up, and you could have bought against the levels when they broke and when they got retested. So sometimes, yeah, you can have a bias, and I know you and me fundamentally and everything else, we have a which way the wind's blowing type bias. But other times you just trade the levels, and whatever it does, and you don't really need a bias. Dollar CAD's another one, playing this, watching this for weeks and weeks and weeks. Then we had a break, and what's it doing now? Nothing. We can't really test the break point. we can't have another go at the low. So we're sideways. So I'm still short in this one. Where does it go? Who knows? If it's getting back above here, though, that changes the picture. You don't really want to be short if we're moving back up here. Conversely, we need to break here to see the next direction. So doesn't matter what my bias is for the dollar, US or Canadian. This is the level down below. This is a level up top. I only need to trade whichever way it breaks, or if not, it trades in between, and you take it from there. So sometimes if your bias isn't working, or the markets aren't moving to your bias, then take the bias out and just trade the techs, and that often works the best way.
Yes.
Yeah, go on, mate.
There's some deadline upcoming for Canada and Mexico. Huh? So if you're going Canada and Mexico, next week should be a hot one, or even this week. We can see a lot of negotiations. I firmly expect Trump to start to heat up all the discussions, or send some through social messages onto the waves, hammering Canada and Mexico a bit, and then perhaps strike a last minute deal. So yeah, Canada and Mexico should be two currencies to monitor this week and into next.
Yeah, and obviously we've got end of month this week as well to throw into the mix. So, I mean, what happens? Do you think that if you're looking at Mexico and Canada, do you think if we don't get noises towards a deal and the threat of tariffs, what happens if he kicks the date again? Is the market going to think, well, hang on a minute, that's twice now you've kicked it. Are you bluffing us here? Or is he going to go, no, you've had your time now. This is it. Tariffs in, slap, and then off we go again with the moves.
I think we may get a delay again. Does he really want to go as far as putting those economies onto their knees is a big word, but a lot of US companies have been saying that they need Canada for sure, and then more to the west and the south, they need cheaper Mexican imports. So it's a really good question. I'm going to lean towards saying that we find some sort of a deal, and I would say that if Canada and Mexico say, okay, we are going to pay for such and such, there will be a deal. That is what I think.
Yeah, no, I agree with that as well. And that's a risk for pairs like this. I think I'm going to stick a couple of sell stops to add to my short below this level. Because if we do get a deal headline, then we're probably going to break that on just a knee jerk anyway. I know you're trading some other bits, but you got anything in dollar mex?
No, not right now. I'm really waiting until I know what's going on. Dollamex held pretty well those supports in the low 20s, so that is something that I'm keeping an eye on. I'm also keeping an eye on for anything that would bring us back closer to 2060, 2080 or so, and see if we get up there, what kind of reactions there are. You know what I really think, Ryan, is that we know Trump, right? He's probably going to hammer them first, and then not scramble back, but then give some back. That is what I think is going to happen once more. Towards the middle of the week, end of the week, he's going to say like, okay, now guys, enough. Bang! If you don't behave well, it's I don't know, 50 or whatever, 30% or so tariffs, and both may get a little slap around the ears on the back of it, and then we are going to get a last minute deal. I think that's the scenario with Trump, and we would. I think there's a high probability that we are in the same scenario again.
Yeah, no, 100% agree with that. And I think as we get closer to that deadline, you're probably going to see volatility picking up as well. And the market, taking a bit of notice. We said since they got the deadline shoved forward, the market forgot about it. We were into the week before type thing. The market's going to start focusing on it again. So watch that volatility. Right, mate, going to ping it over to you.
Yeah. Yep. I don't have an awful lot to show today, but I can, for instance, let me just go. I want to show the Aussie and the Kiwi today, because I know you showed the Aussie already, but there's some interesting range here developing. You know, since we broke above the 63.30, we've been coming back close to it, bounced, coming back close to it. There's also this little bit of a trend line, this prior one that broken, which held as well. I think this is interesting, and it's still around 63.30. So this is something that the market can, or we as traders can hang on to right now, which is basically what I'm doing. And the top side, as you say, there's a lot going on here between 63.95, 64, 64.15, which is a bit of a which is the 38.2 here. So that's going to be the thing. So it's relatively simple on this one to if you have a position or if you want to trade both sides, it's relatively simple to know what to do. If we get back below 25.30 on the Aussie, we're probably going to correct more. Whether we dump, I don't know, but we probably see a 62 big figure again. If we go higher, yeah, there is this 64.40, but I think if we go higher, there would be a fair chance that we're going up, have a look at 65s or so. And on the Kiwi, it's starting to be interesting as well. We have this, first of all, this wedge, and now this intermediate line, which is a bit too steep for my liking. I don't like steep lines, okay? And it's a bit too steep for my liking, but it's coming in around the 57.30s, and it's holding as well. So this zone that we are trading in right now is relatively interesting. If we get back down, I think we can get have a look back at 56.90 figure. And if we go back up, we are going to have 57.70. But then if we really push up, which is slightly my preferred scenario right now, but we never know. And actually, China could play a role in this as well if they start to play a bit ugly with Russia. The antipodians may perhaps feel a bit of heat, but we have to watch this. But in what this tells me that is we can have a look at the 58 at one stage, and why not push a bit higher. But therefore, we need those two levels here to hold at some stage. Okay.
If you take that screen a bit wider back to late 2023, that 57.70 is that low.
Yeah, here.
Yeah, I've had it on my chart for a while. That one, and it's banged that right on the head.
And it's actually a pretty decent because we had lows here, a low here, a low here, and that line. Well, this is at 58 now, but yeah, 57.70, anywhere between 57.70 and 58-ish. Kiwi should find offers, but if it doesn't, then we probably move back up into a higher zone. But let's see first of all how the dollar trades in the next days, maybe even weeks. There was an interesting one again on the Euro Aussie. That thing here, that triangle or wedge is respected. Yeah? It's really interesting because we had this spike on the positive euro. Well, German elections relatively positive, and we held the top line here roughly, and we also kept around the prior high. So for those who are trading euro Aussie, this is an interesting development as well because we are shying away from it. So can we get back down to 163.5? Who knows? Really, for the time being, that's about it for me. Gold is struggling a little bit before I don't know going up to 3,000 perhaps, but it's struggling a little bit around this around those top end of the formations, the prior tops. Still nothing bearish about this. Let's be clear, nothing bearish about this. But maybe it's in the waiting room to know what's going to happen on the geopolitical side of things, and for as long as it's in the waiting room, I don't see too much fresh to be done. But if we get back above those 29.50s, 55, it may continue to push higher. Anything else that people are looking at? Doesn't seem like it. You showed the cable, did you, or not?
Only briefly.
Oh, okay. I mean, yeah, there's not a lot to show here. Very short-term trend lines. Still the 126.15, 125.90, I think is the support area. And top side, yes, we need to break above 127 as Ryan showed. Uh, I think your dollar China is interesting, Ryan. Whoops. Your dollar China is interesting because that can't get up there anymore. I was hoping for a last move back up there to try and short into and put my stop above those prior highs, but it's not getting back up there for the time being. It is not. Maybe there is a bit of stress coming if Trump slaps some tariffs on there, and perhaps geopolitically as well, with Xi reaffirming the friendship that they have between China and Russia. It's possible, but it looks as this may be a big tradable top zone that we've seen there. Okay, the situation is still fluid, but I wouldn't be surprised that we slowly come back down here.
Yeah, I was looking for that sort of 721, 722 for lopping a bit more off my shorts. We didn't quite get down there, but yeah, you never know with this one. We get a headline, it'll be back up at 730s.
Yeah, you see this is something that I was watching here in the dollar mix. Well, it's actually a bit higher here, this range top, but already somewhere around 2075, 2090. That is something that I'm watching, and here we briefly broke below and then went back above, and we're holding above, but we are like bumping off the trend line. Any good news? Really, any decent news for Mexico? The wall is probably going to be raised and extended and things like that, but is that really important for a market? I think what is more important for the market is what is passing through and how Mexico is going to be treated on the tariff side, or do the U.S. companies need Mexican goods and the Mexican manufacturing side of things, because they manufacture still a lot cheaper than what they do in the U.S. If we get positive news, I think we are going back and probably lower here, perhaps back to 19 even. Okay, if we get really negative news, then and we start to break above 21 again, then we are probably finally going to get up to that 22 zone somewhere here, which will be a monster level if we ever get back up there for me. And that's it for me, Ryan. Back over to you, mate.
Did you want me to have a quick look at dollar yen, or?
Oh, sorry. Did somebody ask?
No, I was going to look at it anyway.
Oh yeah, go ahead. Go ahead.
Yeah.
Go ahead.
I'll go back. This is one of those times where I rue being off, because this 149s was my next level, big level down here on the breakdown. If potentially to go try for long, but I didn't do anything. I might have done something this morning, but I wasn't fully up to speed on the news and whatnot. Big old level down here for me. This 148, 80, 90 area. Just these little bits of price action we've had down here. When we've broken under this 149, 149.20, we haven't lasted long, and the same things happened here. And in fact, we are holding this fib level, or the 50%, around 149.20 after these moves down. So this is, for me, a significant level. If we're breaking under here, then we might be heading down to 147s, which again is another one of those long-term key areas that we've had a lot of action around. It's like your 152s, your 155s, your 157s, all that sort of business. So this for me is a big key area. What's part of the reason we're down? Is it still Japanese data, or
well, I mean, there was
risk off with Trump slanging off Zelensky, and we've gone from 2 weeks ago, okay, someone's finally taken the bull by the horns and sorted out this Ukraine stuff, to then he's slagging Zelensky off and saying he's part of the cause.
Yes, there's been different things, Ryan. So as I was mentioning on the different shows last week, there's quite a few tailwinds for the Japanese economy right now. The data are doing relatively okay. Um, you have the fact that they could escape the worst tariffs. You also have this thing where Trump is looking at Japan as still being a good investor. You also have had no fight back, no big fight back until actually last Friday from Ueda on higher yields. He did say Friday though that there was a possibility that they would buy unscheduled bonds if the yields would spike. But so for the time being they are going higher, but we don't have a runaway spike yet. There was also a positive. Oh yes, the positive one on the gas and oil fields in Alaska, which is in theory a joint venture with where Japan is part of. So there were a lot of tailwinds for Japan, and then we had the risk of move that we saw at the end of the week as well. So all of that was quite supportive for the Japanese yen. Now we are, as you say, we're starting to come on interesting levels, and also I forgot to show it, but it's not that important. But I know Derege is trading it actually. Euro yen 155.5, 156 is a pretty interesting zone that we can see on the medium term as well. It is an interesting zone down there. So that is something that just technically it may hold for now, just the same as you were showing there in the dollar yen. But there's quite a few positive wins behind the yen, and not in the least. But again, I think it may be a little early, but we are getting to levels on the Japanese yields where the Japanese whales may get very interested in repatriating some funds and upping their holdings in JGBs. Okay, I'm not sure about the timing. I'm not in their books. I don't know what they are doing. We may have already seen a little bit of it, but there's a lot going for the yen right now.
Yeah, cool. Thanks, mate. As you can see, that 148, 80, 85 level is a bit of a doozy. It's had plenty of action going back a couple of years. So that really is potentially a bit of a trapdoor moment if that breaks. But anyway, that's enough for today. It's only Monday. Hopefully we got you set up for the week ahead. We shall catch you tomorrow. And have a good day. Have a good week. See you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.